The Korea Exchange, KRX, is the country's only securities exchange. Its headquarters are in Busan, with a cash markets and market supervision office in Seoul. Under the Korea Stock and Futures Exchange Act, the Korea Exchange was formed by combining the Korea Stock Exchange, KSE, Korea Futures Exchange and KOSDAQ stock market. Korea Exchange has 2,409 listed firms as of December 2020, denominated in Korean wons, with a total market capitalization of 2,314 trillion KRW, 2.1 trillion US dollars. Financial instruments available include stocks, bonds, exchange-traded funds, ETFs, exchange-linked warrants, ELWs, and real estate investment trusts, REITs. In terms of derivatives products, you can find index instruments like the KOSPI 200 Index Futures, KOSTAR Futures, KOSPI 200 Index Options, Single Stock Futures, Equity Options, Interest Rate Instruments, Foreign Exchange Instruments, USD denominated options, and Commodity Instruments. South Korea's economy is a highly developed mixed economy controlled by Chaebol's family-owned corporations. It has Asia's 4th largest GDP and the world's 10th largest GDP. It belongs to the OECD and the G20. It is one of the next 11 countries which have the potential to dominate the world economy by the middle of the 21st century. South Korea's demanding educational system, as well as the creation of a highly motivated and educated population, are primarily responsible for the country's high-tech boom and rapid economic progress. South Korea adopted an export-oriented economy strategy to fuel its economy, despite having almost no natural resources and a high population density in its territory, which prevented continued population growth and the formation of a large internal consumer market. In 2019, South Korea was the 8th largest exporter and 8th largest importer in the world. The International Monetary Fund, for example, has praised South Korea's economic resilience in the face of different economic crises, noting low state debt and substantial fiscal reserves that can be rapidly deployed to handle any foreseeable financial crisis. Korea, along with BRIC and Indonesia, is described by other financial institutions like the World Bank as one of the fastest growing major economies of the next generation. South Korea was one of the few industrialized countries to avoid recession during the global financial crisis, with an economic growth rate of 6.2% in 2010, a significant increase from 2.3% in 2008 and 0.2% in 2009, when the global financial crisis struck. Despite the global economic crisis, the South Korean economy recovered with a record current account surplus of $70.7 billion at the end of 2013, up 47% from 2012, with technology products exports being the primary economic output. Despite its high growth potential and apparent structural stability, the South Korean economy suffers permanent damage to its credit rating in the stock market as a result of North Korea's belligerence in times of deep military crisis, which has a negative impact on the South Korean economy's financial markets. Furthermore, the chaebol's dominance, which many South Koreans regard as very corrupt and influential in the political system, is likely to continue, posing the risk of delaying the transformation of the South Korean economy for future generations. Corruption is still a major issue in South Korea. All 4 living past presidents have been condemned to jail for offences ranging from abuse of power to bribery and embezzlement, with 2 of them still serving their terms. Many South Koreans of the younger generation believe that they do not profit from economic progress and have condemned the country's increasingly tough socio-economic position and social stratification, calling it Hell Joseon. They've also labelled themselves as members of the Sampo generation, which have given up on dating, marriage and having children as a result of high living costs and unemployment. In the industrialised world, the country also has the greatest rates of poverty among the elderly. According to a Goldman Sachs estimate from 2009, with a united Korea, North and South, GDP might be greater than Japan's by 2050. If a domestic tax exemption is not available, a treaty-based tax exemption may be possible. Otherwise, a non-capital resident's gains will be taxed in Korea at the rate of 11% of the selling proceeds or 22% of the capital gain, whichever is lower. The Bank of Korea and the Korea Development Institute publish important economic statistics and trends on a regular basis. Equity research on Korean stocks can be done with the Statistics Korea website. First, with more than 100 regions covered, you can learn more with the Exotic Markets book available on Amazon. Second, you can explore sector and industry intelligence for different countries by going to pervasives.com. If you have an issue in relation to accounting and tax with foreign stocks, you can contact us by going to our website.